Good morning or good afternoon, depending on which time zone you're connecting from. I would invite our speakers to turn on their cameras. Thank you. Welcome to you all to this online seminar on CCP Recovery and Resolution. Today we have the pleasure of having with us Professor Koppel from Queen's University and two distinguished speakers, Professor Ron Burston from Tilburg University and Dr. Mark Peters from the European Commission. Professor Koppel, the floor is yours for the introduction to this event.
Thank you very much. Welcome to everyone here also from Canada. It's a bit early in the morning. I just got up a few minutes ago, so to speak. Today's topic in the online seminar is CCP Recovery and Resolution. And it's fair to say that 10 years after, or more than 10 years after the financial crisis, one of the really lasting impact of the turmoil that we saw in 2008, 2009 in financial markets is a fundamental reform of the clearing infrastructure in financial markets. And if we think about this now 10 years later, or 11 years or 12 years later, we are still grappling with certain issues of this fundamental change. And so that explains why we're talking today about a CCP and its recovery and resolution. I would add one R to that. I talk usually about the 3 R's. If we think about CCPs, something terribly going wrong with the CCPs, which have to be seen now as almost too important to fail. So it's not only about recovery and resolution, it's for me a 3rd R as well, which is the resurrection of CCPs, because we have this infrastructure put in place. And there could be a situation where recovery and resolution is actually not enough. And we basically have to reintroduce the infrastructure later on. And maybe in the discussion later on, we can come back to my comment here. I don't want to talk too much about the topic because we have 2 eminent speakers here. Let me introduce the speakers of today. We have Ron Burston, who is a professor at Tilburg, but also an independent director at LCH. And at LCH, he chairs the risk committee. So he's really at the forefront of the discussion from 2 angles. First of all, he's an academic, but he is also a long-standing market. He's working on the market side, and he used to be involved very much on the regulatory side through his engagement at the Nederlandse Bank. So he's going to take more an academic industry perspective on the question of CCP recovery and resolution. And then we have our second speaker, which is Mark Peters, who is, I think, currently at the European Commission in the Directorate General of Financial Stability, Financial Services and Capital Markets. Okay. And he has a long-standing experience in the regulatory sphere. So he's going to provide a counterpoint, I think, coming in more from the regulatory perspective. And so without much further ado, I'm going to turn it over to Ron, who's going to speak for about 15 minutes. And then Mark Peters is going to come in and talks also about 15 minutes. And then the participants have the possibility to ask questions. So we have a Q&A feature here. Please, if you have a question, type it in the Q&A functionality of Zoom. And after the seminar, I will basically rephrase your question and basically read it out to the 2 speakers who will then basically answer the question. Thank you very much. Ron, over to you.
Thank you very much, Thors, for the kind introductory words. Welcome, everybody. I will start sharing my screen. Hopefully you can see it now. If not, I'm sure somebody will react. Thank you very much. What I will first would like to tell is the usual disclaimer. It's our institutions where Mark and I work do not necessarily represent the same opinions that we have. And of course, all errors are our own. And I would like to kick off this session with an important question on the likelihood of CCP recovery and resolution. Because what I find often is that in discussions with industry participants, but also with regulators and other academics is that now we are talking about CCP recovery and resolution all the time, and somehow I have the feeling that some people think that this can happen tomorrow. Well, of course, anything can happen tomorrow given the current COVID crisis, but for CCP recovery and resolution, something really extreme needs to happen. So we are going to look at the end of the waterfall. Now, usually a waterfall ends in a beautiful lake or in an interesting river, but the end of the waterfall of a CCP is a place that you rather would not like to visit. But given the fact that we cannot avoid it, we will need to do so today. So how does the waterfall look like? This will be a reminder for most of you. We have, of course, the access criteria for accessing the CCP by the market participants. And these access criteria make sure that only highly credit institutions are allowed to join the CCP. And of course, because all of the participants know this from each other, they can take it into account in their risk management. Then we come to the pre-funded waterfall part, which is consists of margin, skin in the game, default fund, and these are all the funds that are available in case of a member default. They can be sized to a cover 1 or a cover 2, depending on the jurisdiction. In Europe, of course, it is a cover 2 for credit risk as well as for liquidity risk, which means that this part of the waterfall should be able to withstand the simultaneous default of 2 member groups in extreme but plausible market circumstances. I say member groups because it can be the case that more than one clearing member is part of a financial group. To take into account intra-group correlation, CCPs need to take into account member groups rather than individual clearing members. So this is the pre-funded waterfall, and what we are talking about is, suppose we have an event where this is completely exhausted. So we have an extreme situation. That can be a situation which is more extreme than covered under the scenarios that the CCP uses for the stress testing or reverse stress testing. Or it can be the case that there are more defaults than the 2 on which this is sized. When we say that we have reached the end of the waterfall, I would like to make it precise. And that is that as soon as the last euro or dollar of the pre-funded waterfall is used to cover the loss, and the loss is still greater than that, then we have reached the end of the waterfall. And I would define this as severe CCP stress, because in all likelihood, under relatively normal extreme circumstances, the CCP should be able to withstand this. And in fact, as we shall see, this event has been very rare indeed. When a CCP goes into severe CCP stress, we are talking about the recovery phase of the CCP. And the recovery phase is a phase which is defined in the rulebook of the CCP, meaning that in that rulebook there are rules that prescribe what a CCP is allowed to do in case the complete waterfall has been exhausted. Now we'll give an example of that later on. If somehow recovery is not going to plan, either because the CCP itself is failing to execute the plan correctly, or the implications of the recovery are such that the financial stability implications are not what the authorities would like it to be, then we enter into the CCP resolution phase. So this just as a kind of introduction and a short reminder. Let's see at the empirical evidence of severe CCP stress in the past. There have been 4 cases. I think these are well known in the literature. They have all been described. And what you can see here is when you go to the rightmost column, there is the solution, the eventual solution that was reached in each of the 4 cases. The first 2 cases are not about systemically important CCPs. They were relatively small commodity markets, and so liquidation was an option there. The last two in 87 and 89 were systemically important CCPs, and that meant that simple liquidation was not an option. And the solution that was reached is what we now call, in modern terms, a cash call, meaning an extra round of contribution to the default fund to save the Hong Kong Futures Exchange CCP. And in 89, there was a partial tear-up of contracts, which is another instrument of recovery that a CCP has in its rulebook, where the derivative contracts are partially teared up, meaning that in such a way the losses of the on that portfolio are invoiced back to the clearing members, and the CCP can restore a matched book. If you look at the root causes, you see that governance plays an important role. Fraud cannot be excluded, but also insufficient margin and the concentration of positions played a role. Now, what you can say here is this really are these cases really relevant for today? Well, first of all, this is the only ones that are in the literature, so there's not more than this. And on the other hand, you can say maybe they are not so relevant anymore for today's CCPs, given the fact that we have since 2004 international standards, which raises the bar considerably above what was present in those days. Anyway, I hope now that you can see how extreme a CCP in severe stress is. I have brought with me two examples. I hope this the print is fairly small, but I hope you can still see it on your screen. And these are unfunded waterfall resources. And I would like to stress the word unfunded here, because this is resources that are agreed in the rulebook. So the contract between clearing members and the CCP is there, but those resources have not been provided by the clearing member to the CCP. What you see here is an exercise that was done at LCH for two of the business lines. One is on SwapClear, clearing interest rate swaps, and the other one is on RepoClear, clearing repos. Let's start with the first example in the top panel of the slide. You can see that the default fund of SwapClear at that time was 5.7 billion euro. And you can see that we have calculated the impact of a progressive number of defaults. Of course, we start at 3 because the two defaults are within the funded waterfall. So you have to go to 3 in order to exhaust the waterfall, bring the CCP into severe stress, hypothetically, and then see how much extra resources are needed. The interesting line is the second line, the remaining non-default assessments, because there you can see in percentages of the default fund contribution how much the clearing members need to fund on top of the pre-funded waterfall in order to save the CCP, but more important, also to save themselves and to preserve financial stability. So when we start with 3 defaults in the SwapClear case, you see 102%, meaning that 102% of the default fund is needed in order to address all losses in the waterfall. So it is slightly over 1 extra round of contributions. That would mean that a cash call of 100%, which is one of the instruments in the legislation, is would slightly fall short for what we need in SwapClear. And then when you go to the right, you can see higher numbers. And there you can see that if we go all the way up to 10 defaults, and these are 10 defaults at the same time of member groups, so it's completely comparable to the normal cover 2. So if we would say cover 10, we need 286% of the default fund. meaning slightly less than 3 rounds of extra cash calls. And these are in the rule book. So for in the case of particular case of SwapClear, members know that this is the type of ultimate liability that they are able to that they can get called into. The maximum is to 300%. That is the maximum for SwapClear. So we are able to handle the default up until 10 simultaneous ones by 3 extra rounds of default fund, which is not a small amount because it would be 3 times 5.7 billion, but still we never have had a simultaneous default of the largest 2, let alone 3, 4, or up until 10. So this is really, really extreme. As this is all in the rule book, the recovery can be done like this. So there's no resolution in principle needed. The CCP is able to withstand this. I have also included another example for RepoClear, which is a smaller service line with a 1.1 default fund. And there you can see that the amounts are smaller. In case of a 3-member default, we would need 41% of the default contribution. And here you can see that the 100% cash call is more than sufficient. Up to even to 10 defaults, because then still only 62% would be needed. The scenarios that we are using are the standard extreme scenarios in the stress testing, and you can see in this case that for SwapClear Lehman is a driving scenario, and for the RepoClear it's a theoretical scenario where the rates down are projected. Here, by coincidence, all of the scenarios are the same, but that is not necessarily the case. There are also examples where, for example, at 7 defaults, another scenario becomes a driving one, and then we would calculate that one. So I hope to have made clear first how extreme CCP recovery and resolution is, and even in that extreme case, the contracts are still there that we would be able to have the unfunded waterfall resources be sufficient up till a large number of defaults. But of course, it's unfunded, so there is a performance risk in those times. And honestly, the world with so many defaults would be a world where financial stability has been lost and would need to be regained. So it would be a very extreme world, which is hard to imagine. But we need to be prepared for the even more unexpected. And so we would like to have the second part of this presentation devoted to the supervision and resolution and the continuum between those two. If we look at the supervision part for CCPs, of course, we have the well-known international standard done by CPMI IOSCO. I see there is a question.
Ron, you can go on. I'm going to collect the questions actually, and then we're going to come back to them after the 2 presentations.
Okay, thanks, Doris. The international standards by CPMI IOSCO, the PFMIs, have been issued in April 2012, which included the response to the Lehman crisis, where the cover 2 was implemented in that standard for credit risk. Those texts have been used. Additional guidance texts have been issued on the resilience of CCPs and the recovery of FMIs more generally. And all these documents are, of course, aimed at making sure that the bar is high enough for CCPs to be able to continue the services. For Europe, as will be well known, we have EMIR, which is the legislation for CCPs that are recognized in the EU. we have the competent authorities defined in that law. There is a supervisory college for cooperation between the authorities. There is, of course, a licensing authorization process, and the capital and prudential requirements are in that law as well. And as you will know, the EMIR has also been recently revised, and that has been adopted in 2019. And actually, the last part of EMIR 2.2, as has become known, has come into legislation this week. Those were aimed at reinforcing the supervision of third country CCPs recognized in Europe, which of course became extra important given the fact that we have the UK that has left the EU. And there is enhanced cooperation between the competent authorities through the newly established supervisory committee within ESMA, which committee is intended to coordinate and harmonize the way CCPs are supervised. Okay, Bart, may I stop here and give the floor to you?
Yes, sure. Thank you, Ron.
I will stop sharing.
I hope that you all can see my slides now. I will quickly go where Ron left us. Here we are.
Mark, sorry to interrupt. Yeah, there was a box which now disappeared, so please go ahead.
Okay. So I think now we will continue this rafting session on the river that Ron alluded to the resolution part, and refer to one of the main standards that apply to the resolution, meaning the FSB guidance and the key attributes for effective resolution regimes that has been mainly developed in the context of the banking sector, but that contains additional annexes, sectoral annexes, one on insurance and the other on financial market infrastructures. And they provide a more specific guidance on how to implement those key attributes in the context of those specific sectors. The one on the financial market infrastructures is primarily focused on the CCPs. Then in order to complement these key attributes, the FSB developed the 2017 guidance that gives a bit more detail about what are the different powers, the tools that can be used by resolution authorities in the context of the resolution of CCPs. Also, what would be the main element that you would like to see in the context of resolution planning, a bit of guidance as well on the organization of the crisis management groups that are colleges at international level that gather authorities involved in the preparation of the resolution for central counterparties. Then after having published this 2017 guidance, the FSB also realized that maybe some further guidance would be needed on the availability of the financial resources that are key elements in the context of the resolution of CCPs, and on the treatment of equity, because notably of the loss allocation mechanism that is typical to a CCP, and that reverts somehow the hierarchy of claim of liabilities in the context of a CCP. So the FSB has been working on this guidance that is rather based on an iterative process that would benefit from the experience gained by those crisis management group, and that look rather as considerations that would support the work of the resolution authorities, rather than already identifying best practices in relation to the financial resources or the treatment of equity. And so we expect those guidance to be published by the end of the year. There has been already a discussion paper that was published for consultation last year, in 2018, and the guidance is expected to be fairly in line with this discussion paper. So if we move now to the European context, and maybe I will spend a bit more time on that slide, since it is recent, fresh news from the regulation side. So as you may know, there was an initial Commission proposal that was published in November 2016. In June 2020, a political agreement has been reached on this legislative text on the CCP Recovery and Resolution regulation. The entry into force is expected by early next year, with then a phased entry into application that would fit with the production of technical standards by ESMA in the context of the legislation. So I'd like to go with you through different main features of the regulation as it stands now. Maybe the first one relates to the cooperation and transparency. Considering the impact of a CCP resolution, and I think that Ron made it clear that it would be really extreme events that would affect financial stability quite materially. A large representation of authorities has been preferred in the text. So this gives rise to a broad resolution college membership. Also, the information exchange, cooperation and coordination between authorities has been stressed throughout the text, as well before and during resolution. So authorities are expected to exchange information, cooperate, consult each other in the context of the preparation, but also in the context of delivering the resolution actions. And the transparency that is put forward in the text will not only apply between the authorities and this consultation process between authorities, but some fair degree of transparency is also expected from the participants and the CCPs. So for instance, CCPs are expected to consult their participants in the development of their recovery plan, which would also be part of their operating rules. Also on the side of the clearing members, they are expected to provide sufficient information to their clients for them to assess the impact of a recovery or a resolution. Now, if we move to another element that is crucial in the text regarding the financial resources, so the art of the core of the resolution process, I would say, you have this objective of protecting, as far as possible, preserving the taxpayers from any impact that would result from the resolution of CCPs. And the co-legislator have really made an attempt to balance the burden between the CCPs and the participants. So in terms of cash calls, for instance, they decided to reserve a cash call for resolution authority that would be capped to 2 times the default fund contribution, and that would be included in the operating rules of the CCP in order to facilitate the enforcement of this tool, especially with third countries. Also, in the context of the resolution planning, there is this expectation that the resolution authority would make prudent assumption on what financial resources would be available based on ESMA stress test and stress tests performed by the resolution authorities themselves. And I think this part particularly is in line with the guidance and the spirit of the recent guidance that will be published by the FSB. One novelty introduced by the regulation relates to this pre-funded second skin in the game that would come prior to the cash call and VMGH in recovery. So the own resources of the CCP would have to be used before turning to the participants. In terms of amount, it would be between 10% and 25% of the capital requirement. I remind you that the 25% is the current level of the first skin in the game in EMIR. And then regarding the details of the methodology for the calculation and the maintenance criteria, so the investment policy that would relate to this second skin in the game layer, ESMA has been mandated to develop a specific technical standards on that. One interesting element as well is the payout restrictions, meaning that upon activation of the recovery process by the CCP, there will be some restrictions imposed by the competent authority on the different payouts. So for instance, dividends or variable remuneration of the CCP. Regarding the no creditor worse off principal counterfactual, there the objective has really to have a realistic and commercially reasonable estimate of this counterfactual. That's why the text used this concept of replacement costs and require the use of, or the reflection at least, of the existing market conditions in the valuation of the counterfactual. It also introduced a principle of contractual symmetry that would protect the clients, meaning that if in the contract between the clearing members and the clients, there are provisions whereby the negative effects of recovery or resolution are passed on to clients, then as by way of symmetry, the clients would have the right to be compensated via their clearing member when it refers to their position. Speaking about compensation, the text foresees a compensation mechanism whereby the resolution authority would have the possibility to compensate the no creditor worth of claims by requiring the CCP to issue instruments of ownership, debt instruments, or claims on future profits. Then maybe a last element regarding the delayed enforcement. It is a provision that would help authorities to recoup last resort public funds that would have been used in the context of the resolution of the CCP. So knowing that in certain circumstances, the text allowed the resolution authority to partially enforce outstanding contractual obligations, where it has been the case, then the remaining obligations of the participants would be used then to recoup the public funds eventually injected for the resolution of the CCP. And then aside of these resolution-specific elements, the regulation also tried to reinforce EMIR on several aspects that are mentioned in the slides. So if we move further to one issue that I wanted to highlight or discuss with you in the context of this session, and if we put all the elements that we've seen of the regulation into this table and into a stylized timeline, let's say, we see that there is a continuum that starts to appear between the going concern and the going concern situation of a CCP. However, it's not always clear what would be the trigger point where the CCP and market authorities would hand over to the resolution authorities. And especially looking at the wording of international guidance, it may be confusing and sometimes a bit questioning the case of resolution and whether there would be a situation where the resolution process would be activated. In particular, if you look at the PFMIs, and I introduced certain quotes from the PFMIs, reading those quotes, you realize that basically it is expected from the CCPs that it would have comprehensive resources that would cover all losses or enable its recovery, or at least a winding down of the non-viable part in an orderly manner. But if you consider that, then the question, and please give your thoughts in the Q&A box. If you read those, then you realize, but then how does it interact with the resolution process? When would the resolution action be needed? And in theory, if the recovery process ends with a TRUP, or if there are assessment rights, unlimited assessment rights that would then protect the CCP from insolvency, what would be then the need for resolution or the aspects of resolution? On the other hand, you could also ask yourself whether it would be credible to have an orderly wind down of critical operation of a major CCP, major clearing activity. Then maybe one element that helps us is provided by the FSB in this context, especially the discussion paper and the guidance that will be published by the end of the year, highlighting some cases where basically resolution would still be needed. So for instance, of course, not all CCP are necessarily compliant with the existing CPMI ERSCO standards. So there is a potential case of non-compliance that would then justify the use of resolution. Clearly, the execution risk, it has been mentioned by Ron, CCP's arrangement may not necessarily operate as they should, or the clearing participant could not necessarily be able to meet their obligation vis-à-vis the CCP. And for me, one of the most important element in my view, maybe you have another view and please share your thought, is the public interest dimension, because those arrangements are putting pressure on the financial stability, and maybe authorities determine that the resolution would be preferable because of the impact it would have on the financial stability or on the continuity of the critical functions themselves, given the market conditions. Also very important in my view in this context, and certainly to bring some clarity and transparency about when you would switch from the going concern situation to the gone concern situation, is the communication, cooperation, and coordination between all authorities. At international level, as I mentioned previously, it has been stressed in the organization of the crisis management groups, and at EU level, the text is really fostering this dimension, and several provisions are alluding to the role of communication cooperation between authorities. This has been a clear objective of the regulation. Maybe I would add, in my opinion, that there is also in this context a role to play for playbooks, the development of crisis management exercises or fire drills that would help then authorities to identify how this continuum could work, and what could be the scenario. Even if stylized scenario or theoretical scenario, it could still provide useful hints, in my opinion, as to how this could work in practice, and what could be the different steps needed in order to ensure the continuity of the services.
Mark, we have about 2 minutes or 3 minutes. So
I'm done, Thorsten. Perfect. I'm done. Yeah. Excellent. Thank you.
Perfect. All right. Thank you very much for these two presentations, Ron and Mark. Excellent. I think we set the stage. We have already some questions, but unfortunately, I think I started in my introduction to open up a Pandora's box with referring to the 3 R's, not only the recovery resolution, but also the resurrection. And so the first question that we got was really about, isn't resurrection the same as a resolution or part of the resolution? Now, my viewpoint is it's different, and I would like to hear your opinion on that, because the elephant in the room is, if we really see a CCP getting into trouble, we are thinking about a systemic event. And if you have a systemic event, it means it's not only the CCP that is in trouble, but probably also the members of the CCP. And then we are staring at the problem of, we can talk as much as we want, the capital is gone, we tap into the default fund, we're gonna do cash calls, all these nice ideas, but at the end of the day, we're staring at a bailout. And so I think it's always interesting to talk about the 2 R's, but the elephant in the room is the resurrection. And so we have actually a second question, I think, here, and which goes in the same direction. And I would like to ask Mark first about that, and then we're going to get Ron's opinion on that. the question says it's not credible to put systemic relevant CCPs in normal insolvency procedures. And I think that just reflects that at the end of the day, if a CCP is in trouble, it's a critical market infrastructure. We created a behemoth of a nexus of risk. So I think there's always the potential of the bailout. And I would like to hear the opinion from Mark first, and then we're going to go to Ron on this issue about the third R, the resurrection, the bailout. Mark, over to you.
Thank you, Thorsten. I think indeed, regarding the application of the insolvency to important major CCPs, I think indeed it is probably not the most credible approach to maintain financial stability and ensure that basically the critical clearing functions would be available would be maintained for the market. I think that it is in the features of the clearing system that basically they would concentrate risk, but then if something happens, this risk will go back to the market somehow. Then it questions the way that the market will be able to absorb that stress. And it's fair to say that I agree with you when you say that basically you will be in a situation where the financial stability would already be endangered. I think we should not necessarily look at the recovery and resolution of CCP in isolation. We have other sectoral guidance and other sectoral regulation that also aim to handle the failure in the system and the resolution of banks, for instance, that would also support this process. So I don't think it is something that we should look in isolation, but at a whole, as a piece of stabilizing element for the financial system in conjunction with all other elements that the regulators and the authorities have put in place. Now, whether we can absolutely be sure that we will never return back to a bailout, well, I would not go that far, but I think that everything has been put in place to ensure that the resort of public fund to public fund would be really the last resort element. And one important element as well in this context is even if we go back to bailout and public funding, there will be this recoupment framework that would help then still make the burden on the private sector and not the taxpayer.
Ron, do you have anything to add to the resurrection part of the bailout part relative to a market solution?
Yeah, I'm not such a fan of the word resurrection. Because it suggests that the service has stopped at some point and then be resumed. And I think the whole point here is that we want continuity of services because we're talking about systemically important infrastructure. And in that sense, I think you need to stress the word infrastructure here. It's more like tap water, electrical power. CCPs are not there to make a profit. There are for-profit CCPs. I do not deny that, of course, but the main aim is to provide continuity of services under almost all circumstances. And of course, we cannot do the impossible. So at some point in time, it is possible to break the CCP. And that's why we have these extreme and more extreme scenarios. But I think in the end, as Mark said, in the last of the last resort, public funds might still be needed. But I think what we have learned is that it will only be a temporary type of resort because it will be recouped somehow from the market. I leave it at that for now.
Okay, good. So I'm just going through the questions that I have. And I have one question here on the risk management framework being comprehensive. And I little bit reformulate this and give it maybe a little bit of a tiny different spin here. But we all know that the risk management framework is supposed to be comprehensive. And so there's two elements to that. So we can never be sure, and that's kind of the question, that we can, even if the risk management framework is comprehensive, that we can mitigate all the risks in there, because there could always be a black swan event or whatever. And I think, so what the CCPs are doing here, and I think, Ron, you alluded to that in basically your default scenario analysis, that the CCP is trying to prepare for that and see what's going on to evaluate the risk. But I would go even further than that. I think it's not. I think that the risk management framework necessarily is incomplete, because we can't foresee every single event at the end of the day, and it is also faulty to a certain degree, and it gives you a false sense of security, because there's always a nexus between oversight in terms of by the CCP, and then basically a failure of oversight, so that we're going to get into a trouble with recovery and resolution. I mean, the best example probably is the Nordic default, where INRS, the big trader, just goes rogue, and there was a clear failure of oversight that in fact led to a problem in the first place in the CCP, so that we needed the recovery mechanism to come in. So Mark and Ron, what's your feeling on this idea of this nexus between oversight and then basically recovery and resolution mechanism? How well can oversight be structured, and how can we actually protect going to recovery and resolution by having better oversight? Maybe Ron, do you want to start with that?
Shall I start, Mark? Let's first make sure that everybody understands the impact of the Scandinavian INR-AS default. As I have defined it in the first slides, that was not a case of CCP severe stress. So the default of INR-AS was able to handle within the pre-funded waterfall. Now, the disturbing part of it was that it was a single trader, not the largest one, and he was still able to consume some part of the default fund, which is something that should not normally happen. And so, but still, bottom line is the pre-funded waterfall was enough. Second point, oversight versus the own responsibility of the CCP. I've been on both sides of that table, so to speak. And what we always, one of the basic rules I had when I was an overseer was that the CCP itself is responsible. It's not the overseer who sits in the chair of the CCP when things go wrong. It is the CCP. Of course, as an overseer, you try to make sure that the CCP abides by all the rules and all the regulations. You challenge them. You try to make sure that they behave. But in the end, it is the responsibility of the CCP to make sure that they can handle the situations. Now, if you then come to the comprehensiveness, let me talk about derivative CCPs for a moment, because if you tear up all the contracts of the derivatives market, you can allocate the loss. And so in that sense, there is no residual loss. However, this could be at the expense of a huge problem with the clearing members, because you would pushing back as a CCP the problem to the market. And that's, of course, the last thing that you want looking from a CCP perspective. But it is comprehensive in that sense. But it may be that you throw away the baby with the bathwater, so to speak. And that's where you have this continuum between recovery and resolution. That is exactly the point where, although the CCP would be able to comprehensively allocate all the losses, the financial stability implications might be such that you want another outcome as a resolution authority. And I think that is the continuum that Mark was talking about.
Mark, do you have something to add to this idea about oversight versus recovery and resolution?
Yeah, maybe the only thing I would like to add is indeed, not every event, and certainly not all extreme stress event can be anticipated and foreseen. And we know already from the history that regulation and supervision is improved because of these type of events happening. And I think also in this case, there have been and there are still initiatives in order to improve the supervisory framework that would apply to CCPs, notably regarding auctions, that would help strengthening the framework and aiming at not having again this type of failure in the future. So I think we are learning by doing, and it is something where we can improve ourselves certainly and learn from history.
So it's kind of interesting. So here I have an interesting question, and so there's the idea that somebody points out here: could we rely on competition from other CCPs in terms of service continuity? So let me rephrase this question. So if we believe somehow, from a research perspective, that in clearing, there's kind of forces of natural monopoly that scale matters at the end of the day. I mean, Daryl Duffy has some papers on that, and I think this is a clear insight in terms of financial market infrastructure. It's much broader than clearing if you go to payments and so forth as well. But in principle, there could be the idea of having a trade-off here where you say like, well, if we have not one CCP, but a few CCPs, that, you know, they become less critical. So it's the same idea. Maybe you don't want to have just one big bank. Maybe you have 10 big banks, and hopefully they are not too interconnected, so that resolution and recovery could be more easily structured, because there's only a problem in one CCP, but another CCP can come in. And that plays again in terms of a resurrection idea, that we just move business from one CCP to another CCP. Any ideas on that? Mark, you're nodding here. Mark, maybe you're going to start taking this question, and then we ask Ron about that. Mark, over to you.
Thank you. I think it relates to the notion of substitutability, and if you consider the CCP activity as being a utility, then indeed this notion of substitution between the different platforms would be more than welcome, in my opinion. I think it is something maybe we should look forward, and it could indeed reduce potentially the stress. There has been, in the context of EMIR, this notion of portability between accounts of clearing members. Why could we not imagine the same between CCPs? But then you enter into the question of the standardization and the proprietary IT platform and systems that they are using that may not necessarily be interconnected. Now, I think it is an open question to the audience and to all of us, whether we want to go into that direction and whether there is attraction to streamline a bit the way the CCPs are working in order to ensure that substitutability.
Ron, anything to add about this idea about competition?
Yes, it is interesting. If you look at the CCP literature, the concept of the competition among CCPs is very little studied. So there is not much to go on from an academic side. I only know of 2 papers. There are two aspects to this. Competition between CCPs is actually meaning competition between clearing members via different platforms. If you want to look at this from a resilience perspective, you need to have the situation where the clearing members are connected to more than one CCP. And that's what we in general call interoperability. So if you talk about competition as a way to increase resilience, because you have more CCPs and they all need to be connected, you are talking about interoperability. Now, there are some situations and configurations where interoperability is beneficial, and there are where it's not beneficial. So this is a kind of an empirical matter whether or not it would help. But the bottom line is that usually clearing becomes much more expensive. So the cost of clearing will go up because you are essentially duplicating the infrastructure. And what we know from the academic literature is that the optimal number of CCPs is 1 if central clearing is superior to bilateral clearing. So that is, if you have 2 or 3 or 4 CCPs, then you are not, from a theoretical standpoint, in the optimal situation.
Great. There was actually a follow-up question while you were elaborating on that, Ron. And it's kind of interesting because redundancy, I mean, we know redundancy is good in a sense. So the comparison here by a question was with an airplane. You want to have a backup system. And we know that from financial market infrastructure. Now, my personal view on this, I want to add something to this, is that the problem with competition is, and because of interoperability, that the members of one CCP are likely to be the important members of one CCP, also the members of the other CCP. So in a sense, with the interoperability, I think the bigger fear here is actually spillovers. If there's trouble in one market, it's going to spill over into another market. And exactly, I think it's the opposite. The competition is not helpful here in a sense, because you want to actually avoid, you want to have like a circuit breaker. You don't want to have the problems of one CCP spilling over into another CCP. So I think the redundancy is maybe not the right analogy here, because they're interdependent systems because of interoperability.
I think it would make more sense to have a redundancy within the CCP, which is of course
right.
what regulation and the standards say about the CCP's behavior.
So now,
and the additional last point I want to make on this point is that during the Lehman crisis, I think that we would have preferred all the stress to be in one point, let's say the CCP, rather than have it dispersed among various clearing members where it was completely opaque who owned what in the OTC market. And now, although we have concentrated the risks, at least we know where to look if we want to have the solution of the problem.
Right. So it took us a long time for the key question to arrive, but it has arrived, and we have about 5 minutes to talk about something that is on everybody's mind. I think I saw quickly in the news this morning, again, that the EU is trying to play tough with England on Brexit. And so there's the Brexit question. And I just read it out. How would European CCPs be affected by a no-deal Brexit? And I think there's, again, two dimensions. If nothing goes wrong, we are fine. But there's one question of oversight, again. If we have basically, and Ron, you're working with London Clearing House, which is kind of a very important player in this market, and it's situated in London, and there would be an oversight question, clearly, because there's a lot of European and even Canadian members in London Clearing House. And there's a particular arrangement, I think, with the Bank of Canada and the regulators in Canada and London Clearing House on the oversight side. But the oversight side is one thing. What will happen if, you know, with Brexit, London Clearing House, let's put it like this, goes under? And how are we allocating the losses then? There's a big bargaining problem between the European players and the English banks and the international banks that are actually members of London Clearing House. How are we affected by Brexit? And I think it's a more general question. If we have to do a cross-border recovery and resolution, how do we deal with this, Ron? Maybe you can give us the official perspective from London Clearing House here.
Well, there is, in that sense, not an official perspective. I have the privilege of looking at the CCP on both sides of the channel, because I'm also independent director of the Paris CCP. So I have a perfect hedge, so to speak. No kidding. But in terms of what happens after a no-deal Brexit, the good news is that authorities on both sides of the channel have understood that we need to avoid this cliff edge problem and have already taken measures to take us safely into 2022 for the continued operation for both European CCPs providing services in the UK CCPs providing services to Europe. Because on a technical level, there have been this recognition of equivalence of oversight regimes. And so we are for 18 months starting from the end of this year, when possibly the no-deal Brexit will happen. There is this, at least for the short term, ensured that there are no problems. Of course, we need to ensure after that that the services can continue. And I think the new oversight regime in the EMIR 2.2 with the new supervisory college of CCPs within ESMA can ensure that harmonization and sophistication of the oversight can be preserved. And of course, there needs to be an MOU between the UK regulators and the EU regulators. That MOU is in place now, and I think that would help ensuring that on both sides of the channel we hold CCP to the same high standard.
Good. Mark, I want to give you a chance. Maybe I want to hear if you have about 1 or 2 minutes. We're running a little bit against our deadline here. But Mark, what do you think about if really you have to engage into recovery measures and resolution measures? How will that going to be work? How will they work? How do you gonna get all the players online and figure out who picks up the losses? Maybe you can talk a little bit about that, Mark, still.
I think that would be more in the implementation of the regulation that we have, and the role of the resolution authorities and the colleges. That was the purpose of these multiple provisions that we have, at least in the European text, to gather around the table as many as authorities as possible in relation to the affected stakeholders, so that basically the home resolution authority, but also the other authorities around the table, are in a position to assess the situation, and that the possible impact is somehow make more predictable, so that we have a kind of presumptive path between the different authorities, so that they can take actions vis-a-vis their own industry, their own institutions. So I think we have the necessary features in the regulation. Now, of course, devil is in the detail, and how it will be implemented will determine the effectiveness of this structure. And that I cannot tell you there.
Yeah, I think, so we are out of time, it seems like. We are hitting right for me, it's 8 o'clock now in the morning. For you guys, it's coffee time at 2 o'clock, I think. It seems almost we need a new online seminar if we know more about Brexit within the next, let's say, 6 months or something like that, to continue this conversation about, more broadly, maybe how to restructure regulation and, joint oversight between the UK and financial markets and the EU, and maybe more broadly international cooperation and coordination in this matter. Okay, so I would like to thank everybody. I would like to thank Ron and Mark for their presentations and the insightful comments in the discussion. I would like to thank all participants for their questions that they posed. We didn't get to all of the questions that were posted. Unfortunately, there were some technical questions as well, but I tried not to go down this route of saying like what happens with auctions, what happens with, is cash calls better than variation margin, haircuts, and so forth. These are more technical questions. So I tried to keep it broad. So thank you again for everybody for the discussion. And as I said, maybe there's going to be a follow-up in 6 months or a year on the implications of Brexit. Thank you very much.
Thank you. Thank you all.
Thank you very much.
Thank you.
So, bye-bye.